Hey, what's up everybody? Huddy coming to you. We're talking about credit card balances and how they affect your FICO score. So pay attention to that. I did say FICO. We're not talking about Credit Karma or any of those other sites that are out there. In FICO, they do have different algorithms. The two that we're going to talk about today is FICO 8 and what I call FICO Classic, which is in the mortgage world. FICO 8 is what your bank is going to use to determine if they're going to give you a personal loan or a motorcycle loan or that car loan, or if you get a credit card through your bank. That's the other thing. Credit card companies, they're using a FICO 8. A lot of car dealers are using FICO 8. So let's get to it and talk about what does that really mean in terms of how credit card balances affect your score. Let's use an example of a $1,000 limit for 3 cards. So you have 3 credit cards, each with a $1,000 limit. And let's say that one card's maxed out, one card is at 50%, and one card is paid off. In FICO 8, they're going to look at that and say you have $3,000 of available credit. You have $1,500 of usage right now. So you're at an overall utilization of 50%, which is really beneficial to the consumers out there, to you. In the FICO Classic world, or in the mortgage world, that's what we're required to use, all of us. We're going to use each individual card. It's not going to be an accumulation. So we're going to look at that card that's maxed out, and it's probably going to cost you around 20 points. That one that's at 50%, that might cost you a few points there as well. The one that's 0, sometimes that could cost you points as well because you have no balance. It seems dumb, I know, but we actually want to see a little bit of a balance on there to show that you need to use credit. Kind of weird, I know. But so in that scenario, you would want to kind of spread it out a little bit and try to get all your credit card balances low so that you're not having and showing one completely maxed out, which again is going to penalize you. This is in effect to help you look and understand your credit score. So if you're applying for a mortgage or you're looking to get credit cards, you can understand where your utilization needs to be and how it's going to affect your score. The other thing is paying off credit cards or keeping a balance. What do we want to do with that? Well, in the world we live in today, it can be more beneficial to carry a small balance. And a lot of people will say, well, Huddy, I don't want to pay interest. Totally get it. Not a problem. If you even carry 5 to 10, 15, 20 bucks on there, so you're minimizing your interest rate, but you show a little bit of a balance, it does a couple things. One is it shows FICO you still need credit, but it also shows them you're super responsible because you have a ton of available credit left, which can improve your scores by doing that. It's really exciting, I know. If you like what you saw, you got my face up there, click that, it'll subscribe you. You can comment below down there, I'll answer your questions. I appreciate you checking me out. Thank you very much.